Most people have no idea what's coming. We're staring down the barrel of the biggest wealth transfer in crypto history. And 99% of people are going to miss it. If you're still watching from the sidelines or waiting for the perfect dip, this might be your final warning. Here's the blunt truth. Bitcoin isn't going back to 30K. It might not even go back to 90K. And over the next 6 months, the combination of macro forces, institutional greed, and geopolitical adoption could send Bitcoin into the stratosphere. There's 4 reasons why this Bitcoin run is different. There are 4 unstoppable forces at play right now, and they've shifted the game forever. Wall Street's Bitcoin machine is just warming up. BlackRock opened the gates in early 2024 with spot ETFs, and it completely changed the market structure. But here's what people miss. The ETF boom is a multi-year onboarding funnel. Financial advisors, pension funds, insurance, and sovereign wealth, they're not in yet. But they will be. Wall Street's entire engine is built to sell, and now Bitcoin is officially part of the menu. The sales calls have already started. And guess what? These ETFs are buying more BTC daily than is even mined. It's like watching gold in 2004, only with 10x the upside. The US is now a pro-crypto superpower. Forget the anti-crypto noise of 2022. The tides have shifted. The US isn't just neutral now, it's leading the charge to become the most crypto-friendly country on Earth. We've got a pro-crypto SEC chair, banks onboarding crypto infrastructure, stablecoin and market structure bills in progress. Every major financial institution is either testing crypto integrations or preparing to go live. And the US president is openly Bitcoin-friendly. That's not priced in yet, but it will be. Sovereign wealth funds are now in the game. El Salvador was just the start. Now it's a race between the US, the UAE, and dozens of others to lock in long-term Bitcoin exposure. BlackRock's Larry Fink is personally sitting down with sovereign funds to talk about 2 to 5% allocations. Let that sink in. If sovereign funds start allocating 2% to Bitcoin, we're looking at 500K, 700K per BTC. This is no longer just an institutional trade. It's a geopolitical one. Corporate accumulation is getting aggressive. Michael Saylor started the trend. Others followed. But now, it's a movement. Dozens of companies, soon over 100, are buying Bitcoin for their treasuries. Not only that, they're issuing debt just to buy more. They're locking up supply, reducing float, and buying more than the network even produces daily. What happens when Bitcoin becomes the most desired treasury asset in the world, and there's not enough to go around? Prices don't just rise, they launch. This is not retail-driven anymore. Previous cycles were fueled by hype, memes, and leverage. This one is fueled by scarcity and conviction. The difference? Retail traders flip bags. Institutions lock them up for a decade. That's why Bitcoin is holding above 100K. That's why every dip is being bought. That's why sellers are demanding higher prices to part with their coins. Risk appetite is back. The S&P is within 3% of all-time highs. Bitcoin adoption now mirrors the Internet in 1999. Bitcoin at 100K is still dirt cheap. Let's talk numbers. Coinbase just secured its MyCA license, unlocking the entire European market. The U.S. minted 379,000 new millionaires in 2024. Most of them still don't own a full Bitcoin, and many want multiple. Meanwhile, the available supply is dwindling. Every family office, every RIA, and every wealth manager is waiting for a perfect entry. What if sub 100K never comes again? The quiet altcoin setup. As Bitcoin stabilizes near 100K, quality altcoins are showing signs of life. Here's what's brewing. The Genius Act could funnel stablecoin growth directly onto Ethereum. ETH is still under 3K, Bloomberg now puts XRP, Dogecoin, and Cardano ETF approval odds at 90%. Not every altcoin will make it. Many will die quietly. But the ones with strong adoption, institutional visibility, and government-aligned infrastructure, they'll run hard. This isn't hopium. It's math. Supply is fixed. Demand is rising. Wall Street, the U.S. government, sovereign wealth, and corporate giants are all converging on a 21 million cap. Every day you spend on the sidelines, more Bitcoin is taken off the market forever. This summer may be the last summer you ever see BTC this low. Time in the market makes millionaires. Timing the market only benefits bots and influencers. Stay sharp, stay educated, and most importantly, stay exposed.